I'm Valerie Phillips. I head the U.S. legal practice at Danos Associates. I'm here to provide a market overview of the past 9 months' recruiting activity and to share a forecast of what we can expect as we head into the fourth quarter of the 2022 calendar year. Turning first to private practice in the Americas. Lateral hires into top firms, meaning the AmLaw 200 and ancillary boutiques, dwarfed the similar period for 2021. The firms that led the charge this year adding lateral talent were DLA Piper, Kirkland & Ellis, and Lewis Brisbois. If we take a look at practice demand, we can use this past month as an example. Over the month of September, litigation and corporate were the areas where we saw the greatest need, with over 100 new jobs posted across the Americas apiece for each practice area. Those were followed by intellectual property and real estate, with respectively 50 and 25 new jobs posted in the month of September. So you see a big drop off between the two, but there is still consistent demand in a number of practice areas. What we've seen, on the other hand, is that there seems to be less interest in private practice in what I would call marginal candidates. Lawyers whose grades might not be up to snuff, those who have made too many moves, or those who have strong credentials coming from good schools and firms, but are looking to pivot focus of practice. A year and a half ago, I would say there was a lot of interest in this. Now all you need is a JD and a pulse won't cut it. If you're looking to make a move to a top firm, you absolutely need to be a square, or at a minimum, a rectangular peg for a square hole. By the same token, it's a bad time of year for aspiring partners or counsel who are currently counsel or associates who do not have portable books, or for those coming out of government or in-house without business that they think they'd be in a position to peel, or contacts that would give business to a firm right away. You have to bring accretive value, not just technical expertise, as a lot of firms have spent their investment hire budget by this point in the year. Any new hires they'd be looking at would be for 2023 in all likelihood. Next, it's worth unpacking what's been going on with in-house legal recruitment. It's worth noting that after the salary wars on the private practice side, kicked off by Milbank with the ante upped first by Davis Polk and then by Cravath, hiring managers looking to attract legal talent to corporate legal departments really face stronger headwinds than they have in recent past years. A move in-house was often seen as a desirable thing for lawyers in private practice, and especially for those lawyers with school debt to service, it was challenging to forgo the compensation, bonuses, and salary bumps that one might enjoy if one stayed at a firm. So despite wearing golden handcuffs, a lot of lawyers were not as receptive to a possible move in-house. And that meant that while it was still possible to target lawyers making an in-house to in-house move, hiring managers for internal legal departments had a smaller talent pool overall from which to choose than they would have in recent past years. Additionally, with in-house, there's been the question of return to work, especially in financial services businesses. Post-Labor Day, there's been a big return to office push, and that has proven a challenge for some. There are a lot of attorneys who have gotten used to and enjoy, or really require, the flexibility of a remote or at least a hybrid 3-2 or 4-1 schedule. And those lawyers won't be open to considering a fully in-office role, even if the job might be interesting, the compensation and the title were compelling otherwise. That being said, there are definitely people who miss being mentored and the chance to collaborate with people. So there are folks who want it, there are other lawyers who don't, but it's been a deterrent to some. Regardless, one lesson we have learned from the pandemic is that the ability to interview remotely means that there are a lot of lawyers who will entertain the possibility of a move because all it costs them is an hour on a Zoom rather than a trip across town. They don't have to make the same excuses. So we've been able to attract a lot more passive candidates to entertain and ultimately make moves because they can complete the process, the interviewing process, wholly sub rosa. In conclusion, I'd like to leave you with 3 takeaways. First, despite the fact that there are some concerning financial forecasts out there, our sense is that fresh job opportunities for lawyers are abundant both at firms and in-house. And frankly, not just in countercyclical practices like bankruptcy, restructuring, and litigation. Corporate continues to show a wealth of job opportunities for those exploring a move. Next, for hiring managers, as many attorneys in big law and in-house have performance reviews on the horizon for the end of the calendar year, and with elections to partnership due to be announced relatively soon, there are going to be a wealth of attorneys strong candidates really, who are looking for a move and open to exploring a possible lateral move. So folks looking to attract talent should see more of it coming to market end of fourth quarter, start of first. And frankly, lawyers who are considering a lateral move would be well advised to get their ducks in a row and have an exploratory discussion now so that they're able to really take steps towards a move across the coming quarter. All that being said, I think the last thing I would leave you with is that this report is really just speaking in broad brushstrokes. If you're looking for more tailored market intelligence, either to support your strategic hiring needs and goals, or to help you explore whether it's the right time to consider a lateral move yourself, it's a great time to reach out to speak to our team confidentially. Thank you for your time.